Hello, investors and traders. 2 months ago, we announced our new series, High Probability Trading. In Volume 1, Issue 1, titled Stock Market Predictions, we discussed our approach and shared our mantra that around 7 times a year, we'll look for what we call high probability trade. While we haven't hit that point just yet, the elements are coming together for a strong setup. By understanding some of the factors that we analyze, you can begin to build your own system and approach to high probability trading. It has taken me over 15 years to achieve this 3 straight years of consistency. I want to be clear, I am not a perfect trader, nor am I a perfect investor. But in the last 3 years, I've been very accurate. Recently, I've also reached a small milestone on YouTube by hitting 1,000 subscribers. Watch time has never been an issue. I am not selling you a newsletter, a program, or anything else. What I am advocating for you is to build your own system and develop your own indicators. That being said, I want to give back a little. There are typically 6 or 7 times a year when I spot a very high probability trade. Over the last 2 years on YouTube, whenever I identified a high probability chance of succeeding, I also provided exit signals. These opportunities are not daily or weekly occurrences. I will only release these set of videos when there is a high probability of success. We will continue with all the other series, such as Inside of Investing, recommendations in sectors and individual stocks, among other things. You've got to follow me through this journey. Right now, I feel I've got this market figured out. Being a swing trader is incredibly difficult. You need to have your psychology down, unwavering confidence in your strategy and consistency. There are so many factors that play a role in profitability, but I'm excited because I've truly mastered the system I've designed. I'm not an influencer. I'm not selling you anything. I'm just a trader and an investor. To understand this high probability trade, you must understand my investment strategy. My investment strategy is based on consistent weight of evidence, rule-based decision-making, and a top-down approach. By utilizing analytics, data-driven insights, and technical analysis, I focus on maximizing the probability of success in my trades and investments. Furthermore, risk management plays a crucial role in my approach, allowing me to navigate various time frames, including short, medium, and long term. So let's delve into the details of how I invest in high probability trading with numbers, mathematics, and probabilities. The overall blueprint we have been following for the last 2 years has been to buy on the pullbacks. We are in the 9th inning of a baseball game or the 4th quarter of a football game. I believe we still have an up year this year. And as the uncertainties of economic, political, and geopolitical issues become more certain, this market will move even higher. But this is not the market we were 2 years ago. There needs to be a different approach than buy on the pullbacks. When we did a video 1 year about ago on our 2024 predictions, we hit a lot of home runs. We told you this was going to be an up year. We told you the Magnificent Seven. We even told you Biden would be replaced by somebody else. And we told you that Trump would win the elections. I am not political. My political beliefs are not in this channel. For this station, who I want to win, Trump, Kamala, Biden, Democrats, Republicans, has no bearing. What I need to do is, if Kamala was in the market, was the president, how would we make money? If Trump, which he clearly is, the president of the United States, how do we make money? There will be a very selective advance. And sometime next year, we may enter a bear market. Not a huge bear market economic crisis-wise, I think, but a bear market. I am very looking much at commodities. And I believe the commodities market will be the way to go. But for now, let's enjoy the moment and continue succeeding in the stock market. For this high probability trade, I will be using the VIX and the VXN. The VIX, or volatility index, often called the fear index, measures the market's expectations of volatility in the S&P 500 index over the next 30 days. Created by the Chicago Board Options, CBOE, the VIX is derived from prices of options on the S&P 500 and reflects anticipated fluctuations rather than direction. For the last 5 years, I've been trading the VIX and the VXN on futures contracts and also futures options. I love it. I think it is such an important indicator. I think it is such an important instrument. I think this is one of the keys to succeeding in this market. But to do high probability trading, I need to mix the VIX with other indicators and wait for extreme levels for these 7 times a year. Some key points about the VIX. It measures market sentiment. The VIX rises when there's uncertainty or fear, typically when the market is falling as investors buy more options to hedge against losses. Conversely, it falls in times of market calm and bullish sentiment. High VIX, high volatility. Low VIX, low volatility. The VIX is an inverse correlation with the S&P 500. Generally, the VIX and the S&P 500 move in opposite directions. When the S&P 500 declines, the VIX often rises as investors hedge their portfolio with options. When I go through the factors of what we're looking for a high probability trade, I am giving the bearish signs on the S&P 500 or the bullish signs, not which direction the VIX is going into. So the VIX is working opposite of the direction the S&P 500 is going into. This VIX is a tool for investors. Traders use the VIX to gauge market risk and investor sentiment, especially during periods of market turmoil. High VIX values may indicate good entry points for long-term investors, whereas a low VIX might signal complacency or low fear. The VIX is a tradable instrument. The VIX itself, you can trade using VIX futures, options, ETFs, ETNs that track the VIX, allowing investors to capitalize on expected changes in volatility. Now, this is a whole video in itself, which vehicle you should use to trade the VIX. Again, I use the VIX futures and options. Some people use the ETFs, but have very high expense ratios. And on the futures and the options, there's a time value of money. So you really have to be right on the time you invest inside the VIX. I just want to give you 2 quick examples. In 2008, in the financial crisis, the VIX spiked to over 80 during the 2008 financial crisis, indicating severe market fear and extreme high volatility. In 2020, COVID-19 crash, the VIX surged to levels above 80 again, reflecting the sudden global market uncertainty. In summary, the VIX is a powerful tool for understanding market sentiment, assessing risk, and planning, trading, or hedging strategies, especially during periods of volatility. What we want to accomplish here is what I call high probability trading, a high probability trade. I will line up 6 or 7 factors today to build you a mini system, thus saying that it's important for you to understand each one of these indicators. It's important for you to take your own responsibility in building your own system. Even if I give you all the answers, it's useless to you if you do not study them. All these black box systems or join a trading group or pay me money and I'll teach you. This will not make you into an investor or trader. This will not make you successful. You need to build your own system. Thus saying that, I must give you a disclaimer. The information provided on our channel is for education and information purposes only and is not intended to be a substitute for professional financial advice. Protect your capital by all means. What do I want to do here? I want to build a weight of evidence. And ironically, even though the market is reaching highs, I am not ready to short into this market, as maybe 1 or 2 indicators are giving us a sign that we are overbought in this market. This clearly is not the case for me yet. Remember, this is a trade. We come up with a lot of videos about what's going to happen in 6 months, 1 year, where to put your money. This is for high probability trading. And I am using the VIX and the VXN as my instrument. But if you look at the first point, if you look at the VIX and the VXN as an instrument itself, we are in a neutral level. Take the VIX at a 50-day moving average, and we've been hovering around all these periods of time. Now, thus saying that, if we drop further this would be the first great indication we can buy into the VIX and short into this market. But we are clearly not there. But for this high probability trade, this will happen in the immediate future, even if it's for a short-term swing trade. But everything must line up perfectly, especially it looks like a very positive 3 months in the market till January. So if we take our first indicator, the fear index, even though it might seem like we are at somewhat lows for the VIX, if you take a look at it on a 50-day moving average, we are neutral. Remember, you are building a system with a structured framework or set of rules that guide your decision-making process. So my first decision-making process is I want to see my VIX, my VXN index, turn into a bearish sign to take the trade on the VIX. Just saying that on the S&P 500, short-term, I am neutral. Obviously, at new time highs, we could back off a little bit here. But intermediate term, I am still bullish. Now, thus saying that, remember this works opposite. So when I say the S&P 500 is bullish, when I say the index is bullish, it's actually the volatility index is going lower. This is where we are now. Let's continue further. If you look at the stage analysis of where we are in this market, we are very close to 50-50 on many of the stage analysis of the indicators. Thus saying that what we've had 2 years ago was an accumulation phase followed by a growth phase, and now we are heading into a distribution phase. This distribution phase could last 3 to 6 more months, but no market goes straight up and no market goes straight down. 3 years ago, we were shorting into the market. 2 years ago, for the last 2 years, we've been buying on the pullbacks, quoted inside every single video we've been doing. Now we're starting to get cautious. Now we're starting to say that this market is getting overbought. And many pundits and even your own emotions will tell you this market seems indestructible. This market seems to be going up higher. We need to control our emotions and build your system and see what happens. So if we look at the futures contract of the VIX, what am I looking for? Even though the market went up, I am looking for even a lower reading. On the future contracts, I'm looking 13 to 14. So I'm looking for another 10% lower on the VIX for me to short into this market for a swing trade. Now, I told you we're building a weight of evidence, and our short-term indicator is at 0, which tells us we are going to have a pullback. But I just do not need one indicator to tell me this. I need 7 or 8 indicators. And especially, I would love at extreme levels. If you look at the overbought, oversold of relative strength, stochastic RSI, our proprietary indicator, short-term indicator, they are telling us we are bearish. Thus saying that a lot of oscillators or a lot of overbought, oversold in an extreme bullish period do not work very well. Where you think something is 0, 0, 0, 0, 0, 0, it's going to go up, or 100, 100, 100, 100, it's going to go down. It doesn't work. That's the same thing what recently happened to Tesla, where many people tried to short into Tesla because of the oscillator of overbought, oversold. But by building an overall weight of evidence, this will help you have better results. So even though we have a bearish short-term, medium, and long-term, everything is not lined up perfectly. We have a specific components overbought and oversold, which is not at extreme levels. Only the indexes itself has reached a level of 100. So thus saying that your oscillator is telling you that we are overbought in this market. But if you take the components of each of the indexes of the oscillators, clearly we are a little bit overbought, but nothing to take a high probability trade. You look at the put call options, they're neutral. Thus saying that if you look at the AAII market sentiment, we are bearish. But again, not at extreme bearish levels. But I think we will get there in the next 3 months. If you look at the write-outs ratio, we are bearish, but not at extreme levels bearishness. If you look at the stock price strength, we are bullish. So what am I trying to do here? I am trying to build a system, putting 7, 8 indicators and to come up with a probability of success. All these indicators do not do the same thing. Some of these indicators are market sentiment. Some of these indicators are oscillators. Some of these indicators are proprietary indicators that I have been tracking for the last 15 years. I am putting a whole system together to have this high probability trade. So how do you profit? Of course, disclaimer. I think the VIX will be a perfect opportunity to go long in if we can get higher highs on this market. And when we reach extreme levels of each of these indicators, then we make our move. Thus saying that we've had a great year on the long side and we are winding down our positions. In the upcoming videos, we are going over indicators, but also in the upcoming videos, we are going over what we will think and predictions of 2025. And if you look back at our 2022 predictions, 2023 predictions, and 2024 predictions, we've been dead on by naming presidents, by saying Biden would not be president anymore or even run for the election, to the actions of the market and Nvidia and Bitcoin. So you know the catchphrase, study it, analyze it, adapt it. Peace.